Stock investors are anticipating a series of policy meetings of major central banks this week. The market is alerted to policy updates for clarity. InstaForex analysts are ready to present the intraday outlook. Last trading week was not the most successful for the stock market because the benchmark indexes closed in the red. The Dow Jones lost 305 points or 0.91%. The Nasdaq lost 0.7% down. The S&P 500 was also overwhelmed by pessimism and ended up with a 0.74% fall with a closing price of 3,934 points. The three indexes traded sluggishly in the pre-market on Monday, trying to retake their footing. The economic calendar does not promise high-impact events. Meanwhile, investors are in the wait-and-see mood. The S&P 500 is expected to trade in the corridor between 3,910 and 3,998 points. Investors are alarmed by a looming recession and soaring inflation. Fed's policymakers did not appear with the public comments, so investors shifted the focus towards the economic data, which stretched their nerves. The US factory inflation was to blame for pessimism on Friday. The US PPI grew 0.3% in November from a month ago, an uptick higher than the consensus. The benchmark stock indexes went down as a predictable response. All in all, the Dow Jones lost 2.3% since the beginning of December. The S&P 500 slipped 2.8%. The Nasdaq slumped 3.4%, and market sentiment might change dramatically this trading week. Wall Street senses that it will find the clues soon. The stock indexes are getting ready for a Santa Claus rally. Meanwhile, the market has come to a halt. The nearest catalyst is US inflation data, which is due to Tuesday. Investors are trying to puzzle out how inflation has responded to the most aggressive cycle of rate hikes since 1980. If the annual CPI is higher than expected, or if it does not decline at all, this could trigger massive sell-off of risky assets. CPI reports have been the catalyst for high volatility this year. The S&P 500 has gyrated by nearly 3% both up and down after the CPI data for 6 months straight. The common price fluctuation measured 1.2% for the same period. The CPI report from September 13 fueled a slump of 4.3% in the S&P, and the data released on November 10 pushed the index 5.5% up and encouraged a further rally of stocks. Investors are pricing in a rate hike by half a percentage point, a moderate increase compared to the recent rate hikes by 75 basis points. The slower rate hikes are viewed as a matter of fact, so Wall Street will be more interested in the Fed's forecast for the ultimate level of the funds rate. Besides, the market is alert to Jerome Powell's press conference, in particular his viewpoint on inflation and recession prospects for the next year. On Sunday, Treasury Secretary Janet Yellen predicted a notable decline in inflation in 2023 unless another black swan pops up. Investors should take a seasonal factor into consideration. Some analysts reckon that Wall Street is set to develop a Santa Claus rally if inflation is weaker than expected and if investors approve of Powell's comments. The S&P has slipped 3.6% this month, but it used to grow 1.5% in December since 1950. There is another camp who believes that Wall Street has exhausted its bullish momentum. Last week, Morgan Stanley warned its clients of a risk for corporate revenues and called on investors to seek shelter in healthcare stocks and utility companies. The stocks of the companies with a mega market capitalization such as Apple, Amazon and Alphabet, Tesla and Meta traded mixed in the New York pre-market. The US dollar still cannot get rid of the doom and gloom. Its index opened the week lower, having shed 0.3% on Monday. It skidded again to 104.70. The index is set to remain in a range until the US PPI publication. The trading range is seen between 104.5 and 105.20. The US dollar extended its weakness on a Monday, though it's shielded from a further fall by the prospects of the Fed keeping interest rates at a high levels longer than expected. Apart from its crusade against inflation, the US Fed now has to estimate whether the US economy is resilient enough at the verge of a recession. The US economy is sending mixed signals. Consumer sentiment is worse than during the pandemic, but personal spending is robust. The manufacturing sector has been shrinking while the service sector has been expanding. This is confirmed by an increase in jobs and wages month by month. Though there is evidence that inflation has been waning, it remains at historic highs. The labor market is a bright spot, though some signs prove it's cooling down. All in all, a steady employment increase by 250,000 jobs per month does not look like a recession. The Canadian dollar is opening this week on a pessimistic note. The USD CAD pays are now trading higher at 1.3668, having added 0.15%. The currency pair is likely to trade in the corridor between 1.3650 and 1.3710. The stronger US dollar is held in the upper hand over its Canadian rival. The loonie is vulnerable to the turbulent commodity market. Oil prices extending their losing streak for a few weeks in a row. Oil prices dropped on Monday because a slowdown in the global economy is offset by disruptions in supplies caused by a closure of the crucial pipeline for the United States. Canada-based TC Energy said on Sunday it has not yet determined the case of the Keystone pipeline leak in the United States. Its capacity measured 622,000 barrels per day. It's the major artery to deliver Canadian crude to the US oil processing plants. It's still unknown when the pipeline will resume its operation. Brent crude edged down 0.08% to trade at $76.05 per barrel, and WTI rose 0.4%. The crypto market has been trading without a clear-cut direction for 2 weeks straight. Bitcoin sank below 17,000 on Monday. The token shed 0.7% intraday to trade at $16,988. Altcoins opened in the red. Popular cryptocurrencies traded lower in a parallel with a flagship token, while investigations are underway in the US aiming to determine who is guilty of the collapse in the crypto exchanges. The crypto market is trading under pressure, though popular tokens are unwilling to go below the levels of December. Cryptocurrencies have been looked in narrow ranges. The trading range for Bitcoin is defined between $16,800 and $17,200. The token is unable to escape from any of the borders. Fresh US inflation data might either revive or ruin the risk-on mood. InstaForex analysts predict that Wall Street could gain the bullish momentum, which could evolve into a Santa Claus rally. Be aware of another volatile session today.